Welcome to UK Tax Unpacked. Today we're tackling making tax digital for income tax, or MTD ITSA. If you're a side hustler, freelancer or landlord, this is going to affect you soon. So let's cut through the jargon and get you clear on what's changing, when it starts, and how to prepare. Think about your tax return right now. One big form once a year. MTD ITSA changes that. Instead, you'll keep digital records and send 4 quick updates every year using HMRC-compatible software. At the end, you'll wrap it all up with an end-of-period statement and a final declaration. That's the new self-assessment. Who must join and when? Here's the timeline. From April 2026, if your combined self-employed and property income is above £50,000, you're in. From April 2027, the bar drops to £30,000, and the government already plans for £20,000 from April 2028, which means many more people will join. HMRC looks at your past tax returns to decide your start date, so this isn't optional if you're above the threshold. What counts as qualifying income? This bit trips people up. Qualifying income is your gross income before expenses. So add up all your self-employment and property income, UK or overseas. Don't include your pay wages or pensions. They don't count towards the threshold. Who's out of scope or exempt? Not everyone is included. Companies and partnerships aren't part of the first rollout. Some people are automatically exempt, like foster carers and trustees. Others can apply if digital filing isn't realistic because of age, disability, remote location, or religious reasons. And if your qualifying income is under £20,000, you're outside MTD ITSA for now. Quarterly updates. How do they work? So how often will you be reporting? You'll file 4 updates a year, 1 per quarter. The standard quarters are April to July, July to October, October to January, and January to April, with each deadline falling on the 7th of the next month. Or if your software allows it, you can switch to calendar quarters. Either way, it's little and often, instead of one big annual return. What would be the year-end steps? After your 4 updates, you'll still do some end-of-year checks. That means an end-of-period statement for each trade or property, where adjustments and reliefs go. Then, one final declaration to confirm everything and replace your old self-assessment return. That's the finish line. Let's talk about digital records and software. The catch here is you must use HMRC-compatible software. Yes, spreadsheets are still allowed, but only if they connect through bridging software. No copy and paste shortcuts. The whole point is that your records must be digitally linked from start to finish. Are there any HMRC software options? As of August 2025, the official HMRC list includes big names like Xero, QuickBooks, Sage, and FreeAgent, plus bridging tools like 123 Sheets if you prefer spreadsheets. The list is updated regularly, so check gov.uk before you decide. So how do you prepare? Pick your software early and link your bank feeds if possible. Choose whether you'll use standard or calendar quarters. Start capturing receipts digitally. Snap a photo, store it in your app. And if you've got an accountant, now's the time to align your systems. What if you miss a deadline? Each late submission earns you a point. Rack up too many and it's a £200 fine. The good news is points do expire after a spell of good behaviour, and if you make a mistake, don't panic. You can just correct it in your next update. Let's bring this to life. A freelance designer making £32,000 plus rent of £22,000 is in from 2026. A ride-hail driver earning £28,000 with Etsy sales of £6,000, that's £34,000 total, starts in 2027. An Airbnb host with £18,000 rental income plus odd jobs of £3,000, about £21,000, isn't in until at least 2028 if the law changes. So timing depends on your numbers. Now let's bust a few myths. Myth 1. Everyone over £30,000 joins in 2026. Fact. 2026 is only for £50,000 plus. The 30,000 plus group starts in 2027. Myth 2. I can keep paper records and just type them in. Fact. You need digital links. Myth 3. Self-assessment carries on as normal. Fact. It's replaced by quarterly updates, an EOPS and a final declaration. Here's how you stay ahead. 1. Check your income now. See which start year applies to you. 2. Choose your software and test it. 3. Pick your quarters, standard or calendar, and set reminders for deadlines. 4. Start capturing receipts digitally today. That way, when April 2026 or 2027 rolls around, you're ready. So here's the bottom line. MTD ITSA is coming in stages, and it's going to reshape how millions of people report their income. The sooner you get comfortable with the digital tools, the smoother the transition will be. Thanks for watching UK Tax Unpacked. Check the links in the description for HMRC's software list and our downloadable checklist. And don't forget to subscribe for more jargon-free guides. Tell us in the comments, what part of MTD ITSA feels the most confusing to you? We'll cover it in a future video.